that could happen, but we really need something major for that to happen.
Hi, my name is Georgia Tucker with Cambridge House. Today I'll be talking with newsletter writer Joe Mazumdar of Exploration Insights. Joe's publication is independent and unbiased, pairing economic geology and equity analysis. We'll also be talking with Cal Everett, CEO and a director at Liberty Gold Corp. If you'd like to hear more from Cambridge House, follow us on Twitter @Cambridge and click the link in the pinned comment below to follow our weekly newsletter. Thanks and enjoy. Welcome, Joe Mazumdar. Absolute pleasure to be chatting with you today.
Great. Thanks for having me.
Let's kick things off by talking big picture. So despite a global recession, the US equities market hasn't really responded, and the S&P is at an all-time high. What does this mean for gold price, and has gold acted in the way you expected during this broader period of turbulence?
Yeah, if we go back for the year, like the S&P was riding very high, and then it absolutely collapsed about a third with COVID impact coming to the Americas. But since then, it's been rebounding. I mean, slowly initially, and gold was the one that came back the quickest. Industrial metals were impacted more negatively because of China being down, and that's the largest consumer of a lot of these base metals. And then what we saw was the S&P gradually sort of eke up, and then I think we saw a little bit of migration with general investors into gold as they were looking at all the expansionary policies that were going around and all the trillions of dollars they were putting into the economy to basically keep them afloat. And I don't think they could have prevented a recession, but to slow it down, gold definitely benefited from that. But recently, what we've seen is as China comes back online, Europe's come back online, and a lot of the states in the U.S. have come back online. The equity market is getting a little more sanguine about a recovery. And so with that, we see the S&P 500 trying to get up. And then, I guess a really good example of that would be the turnaround, the unemployment numbers, the jobless claims for May. They're expecting, I believe, a $2.5 million drop, and they got a $7.5 million gain. And so a 10 million turnaround, and that really buoyed the S&P market, or the markets in general last week. That has had an impact on moderating the gold price right now and keeping it a bit range bound. Every now and then it breaks 1,700, and it's around that 1,720, 40 down to about 1,680 right now.
Well, let's talk more specifically about gold then, Joe. So I know you wait for volatility to buy on the dips, but this has been, the most unpredictable gold market many of us have ever seen. Does this excite you, or is this too chaotic to navigate?
Well, I mean, it is a bit chaotic, especially when all the uncertainty of what COVID-19 was and the impacts. What do you have to do and stuff like that. But as we see a lot of the curves flattening, going down, I think people are sort of feeling a lot better about controlling it. We don't have a virus yet, but I mean, we're still hindered in terms of travel. I haven't done a site visit in a long time, that sort of thing. And that's had implications for companies as well. I think right now, the volatility initially, I didn't panic and sell everything. And if I did, I probably would have wanted to do that in January. That would have been a good time. I kept a lot of my stocks because I was comfortable with the portfolio. But what I did do was around the middle of March, I saw a few companies that I really liked that I thought were really undervalued, and I purchased a few there. And one of them is the company we're talking about actually later, Liberty Gold.
Awesome. Well, let's talk about gold price. Do you expect to see $2,000 gold this year?
Well, I mean, if we look, I mean, right now where gold is trading 1,680, 1,700, a $2,000 gold price means about a 20% increase from now. We've seen a 20% increase from where it dropped below 1,500 to the 1,780, almost to the 1,800 level as it was trying. So that could happen, but we really need something major for that to happen because COVID is a significant event globally. Can we see something else like that potentially raise gold price? I don't know. But I know one of the big uncertainties that we've got going forward, especially in the US market, is the election in October. So all that volatility leading up to it, how it impacts the markets might buoy gold.
Mm. Can you speculate a summer price? Are you expecting to see a steady incline or maybe a bit of a pullback?
I think right now, if we don't see another, significant, catalyst for gold, I mean, it might continue to range bound sort of around 1680. But right now, for me, if there's any kind of collapse, most of these companies are still using, I mean, the major producers are still using 1250 to book reserves, and the gold price is closer to 1700. So a lot of these companies are much better shape than they were in the last cycle, to come out of it. So, potentially on the dips, we might see more consolidation. And for me personally, on the dips, I'll be looking to buy more of those companies that I like uh, and take that opportunity.
Awesome. So we're seeing groups outside the usual suspects, the Eric Sprotts and such, that have been involved in raising cash for the mining sector this year. Is that just gold price, or why are we seeing more people at the party?
Well, I would say that people are worried about what's happening with the global economy, the potential recession, the printing of money, and people are migrating towards gold. And then as they get comfortable with gold, they're looking for a little bit more leverage, and then they buy the ETFs, and then after that they look at specific companies, and we've been seeing that with Barrick, the new model, and now we're hoping, and we've seen, with the financings, the trickling down to, the juniors, and that's really good. We're seeing, basically a recapitalization of the sector, and in parallel, we're seeing some consolidation, which is another positive.
Joe, what percent of your investable assets are in gold, either physical or in equities?
Okay, I mean, in terms of the EI portfolio, the Exploration Insights portfolio, about two-thirds is gold. I also diversify by stage. Because I'm positive on the gold price, I've got more producing companies. I got two of those, and some silver exposure as well. And then I've got development projects, because I think there is a paucity of those kind of projects right now, especially the high quality ones. So that gives me a little bit of an M&A bid, hopefully. And then on the exploration side, I've got exploration companies that do gold and several other commodities. But the thing about exploration, especially grassroots, is it's a little bit more commodity agnostic, in the sense that if you get a discovery, the market will reward you regardless of the underlying commodity.
So we have to talk about silver. What can we expect to see? And are you actively investing in silver equities right now?
I haven't gone nuts with respect to silver, but I do own a silver company to gain leverage to the fact that silver tends to be more volatile and provide more leverage. But silver's got that sort of dichotomy between an industrial metal and being something a little bit more in terms of an investment commodity like gold. And so it can hold it down in some efforts, and it also can support it. And so it was probably impacted like copper, like nickel, when China went down in terms of industrial production, and it probably has come up. Right now, I mean, at one point the gold to silver ratio was peaked at around about 125, 127 times. It's come down quite a bit, and now is under 100.
Let's talk a little bit more about your strategy in the portfolio. Um, I guess quite simply, are you deploying capital in the market right now?
Yeah, I mean, when the gold price dipped below 1,500, it was about 1,460, and we saw the GDXJ take a big drop. I did deploy at that point, thinking that here was a great opportunity to pick up some companies I've always wanted to own, but were too expensive. One of my ideas right now, in terms of the investment thesis for holding a portfolio, is not only do I want decent returns, but I also don't want to be embarrassed. So screening these companies is very important, because obviously with the subscriber base, we have a lot of people that know a lot of things about the equity market, from people who are VP of exploration for companies, institutional equity, private equity, and high net worth that are really, into this market. So, when I present something that I want to buy it, I will buy it. I got to sound like I have done all my, not only sound, do my due diligence on it.
Of course, and we'll talk a little bit more about your vetting process shortly. In your opinion, what should investors be looking at right now in terms of size of company, bigger producers or latest stage exploration? Can you provide some insight?
Yeah, so it depends on the commodity. So if you're really bullish on gold, then what we've seen, and what's typical is that producers and the majors go up the quickest and the fastest. Then it moves down to the mid tiers, and then exploration side, because then you have to look at supply and demand into the future.
Hmm.
In terms of gold, I'm deploying it at all stages, exploration, grassroots, development up to producing. But with base metals, because right now, base metals are just picking up. I still like copper, but what I want to do is maybe pick a development play that would fit a window later, because now we're seeing a lot less production. We're seeing people not deploying capital to build new projects, and so hopefully that means that the copper price will rebound. Maybe in 2024, 2025, and if you have a project that fits that window, that might be what you do. So I do that, and grassroots for companies in things like copper and nickel.
I mean, just to finish off, Liberty Gold, who will be speaking with us shortly, what boxes did they tick off when they came onto the radar?
Well, I mean, I've had success previously as an equity analyst, and as well as a shareholder in AUX Ventures and Frontier. They've jointly advanced the Long Canyon deposit, which got bought out for, I don't know, was it $3 billion by Newmont? And so it was another case where, like Reservoir, where you have one company buy the asset, and when an asset's really high quality, that asset gets bought a couple times. If you're an equity holder, you can, it's almost like the gift that keeps giving. And that was the case for Long Canyon. And the people involved in Long Canyon are the same people that are involved with Liberty. Moira Smith was the geologist in charge of that. And so when she's got a hold of an asset and she's doing very detailed work, I basically, my ears perk up if that's the case. And also with the CEO Cal Everett, he's been able to fund all that work, by divesting himself of assets that the market is not giving him any value for. A lot of the assets in Turkey that Pilot Gold had, now it's called Liberty, they've been divesting, but that's had no market value basically, but they're bringing in cash, and now they're funding the development and the advancement of Liberty. And what I like about the project that they're working now is Black Pine in southwestern Idaho, is that there's a big land package and there's a lot of upside potential there. And also, getting back to COVID-19, they haven't been slowed because a lot of their people are in the States, and so they can actually get to the project. And so that's another thing people have to watch, is that some companies may be funded, but they might not be able to work because they can't cross the border or something like that. Liberty doesn't have those kind of issues.
Yeah, that's a great point. Well, that sounds wonderful. Why don't we bring Cal on and do a little bit of a deep dive with Liberty? I'd like to welcome Cal Everett, CEO of Liberty Gold Corp. Cal, can you let the viewers know a brief overview of Liberty Gold before I let Joe grill you?
Oh, I don't mind Joe grilling me, but it's pretty easy to give you an overview of Liberty Gold. Liberty Gold is focused in the Great Basin of the United States, looking for bulk tonnage oxide heap leach Carlin-style gold systems. We have what we believe is a tier 1 discovery at the Black Pine project in southern Idaho, which is where most of our money is being spent right now, and a tier 2 type asset with an economic study in western Utah, and the company is being restructured, so it's 2 major projects in cash and receivables. And then I can absolutely go through all the details with Joe for you. And for people who are looking for more information after this, they can go to our website, and there's verified presentations. You can play with 3D models and understand everything we're doing. And the stock symbol on the TSX is LGD, and in the United States on the OTC market is LGTTF.
Awesome. Thank you so
I had
much.
to read it because I don't check that market.
Fair enough. I will let Joe take it away.
Hey, Joe.
Hey, so I mean, you previously worked like as an investment banker and that, and then you came back and started running this company. What drew you to Liberty Gold?
I retired too early. Pretty simple answer. And I was just tired of over 25 years on the sell side of the market, on the mining side. And after turned 59, 60, I decided it was time to retire. And then I was home for 6 months, and it didn't take long with my wife recognizing at first that I just needed a vacation. And so I decided to try something different. I'd never run a public company before, and that's why I came back and took on the job at Liberty.
Okay, like when we talk about grade, like everybody wants high grade in that, but obviously the focus should be on margin. And so what's the difference between, your grade giving you a high margin, even though you've got other people talking about 6, 8, 10 grams, and you're dealing more with the ones and twos?
Yeah, okay, well, it's actually 3 M's here. So you need management, and you've got Moira Smith, who's got a track record of finding some of the largest deposits in North America. She's the discovering VPX on Long Canyon, which is the Barrick JV's most profitable mine. That was sold for $2.3 billion in 2011. She's the person who selects these projects. So on-site management is key. That's number one. And our minimum target size, if we're going to take on any project, has to be a minimum of 2 million ounces. And on Black Pine, she's already said 4 million ounces looks like it's conservative. Number two, your question on margin. There's two different types of margin. There's high grade, high grade, high margin, and low grade, high margin. So these tend to be low grade, but extremely high margin rocks in the type of deposit we're exploring for. You don't want high grade, low margin. You don't want low grade, low margin. It's just asinine. It just doesn't make any sense whatsoever. So the average grade for a run-of-mine heap leach deposit in the Great Basin currently stands around 0.4 grams. That's in the latest quarterlies from all the producers. That's Kinross, SSR Mining, Newmont, whatever that we can pull out of public records. The average recovery is 70.3%, but they're incredibly cheap to build. The permitting period to put one of these into production could be 5.5 years, not 10 or 12 years if it was an underground operation. So we're dealing with lower grade, high margin rocks, okay? So our Gold Strike deposit in Utah, that's 0.48 grams, but extremely high margin rock because it's got 78% recovery. Black Pine is an anomaly because we're getting significant thicknesses of 1 to upward of 40 grams over 20 to 50 meters. That's the payback of capital rock. If it costs you $8 a ton to move a 0.4 gram ton, and that's stripping it, dump leaching it, and getting your gold out of the rear end of it, and it costs you the same $8 to move a $120 ton or a $200 ton, that's what they found at Black Pine. So they've successfully defined two major high-grade discoveries that are going to come into the mix with regards to economics and the payback of capital. So that's low-grade margin, high margin, and high-grade, really high-margin rocks combined on the same project. And when you get to mine life, when we model something like Black Pine, I can't give you a PEA study on this project because basically we don't know how big it is. So if you had 2 million ounces, why would you do an economic study if it was 4? If it was 4, why'd you do it if it was 6? Because you're modeling the wrong deposit every time. So all the market really needs is metallurgy and a specific gravity. And anybody can put their arms around the volume of rock that we're dealing with, and they can run their own economic models and figure out what the economics are this going to be. If you go look at Gold Strike, at $1,500 gold, the after-tax IRR is 41.4%. So what's it going to be at Black Pine when you start dealing with 2, 3, 4 gram material blended in the mix? It should be superb.
Obviously, metallurgy is very important. And so when you look at a resource, domaining by metallurgy, understanding that, hey, this is going to be run of mine, so that's going to be cheaper, so I can lower my cutoff grade. Or this might be, potentially milling, so I increase my cutoff grade. So this metallurgy that's a big catalyst for you?
That's one of the key deliverables for 2020. And based on the work that we've done so far, and I'm certainly not going to give you a date when we're looking at releasing metallurgy, but that is probably one of the most key deliverables this year, is to confirm that the previous operator had poor ore control and management of a heap leach process, which ultimately could show that the only reason this property was available is because of management's previous failure to operate a run-of-mine heap leach in an effective economic manner.
So, Cal, when I got into Liberty, like I was telling Georgia before, this was one of the stocks that I tried to take advantage of when we had, the sell-off. But now, we've obviously the market's come back. Liberty's drilling. So, what should somebody at this stage where you're trading right now in terms of your valuation look forward to, and why should they be interested in Liberty Gold?
So number one, they have to look at whenever the metallurgy comes out. And the question is, does it work? And was the previous operator incompetent in how they ran that operation? Number two, pay attention to where the drill holes are actually being drilled from and the new parts of the property where we're drilling, and analyze those results as they come in. But the news is going to come fast and furious now, because it takes us 4 weeks to get a hole into the lab and get our prelims back. And if one sample is 5 grams of gold or greater, it takes us 2 more weeks to get that analyzed to find out if it's 5.1 or 8.1 or 11.1 grams.
Oh, wow.
That's the assay delay. So when we're drilling these oxide systems, when we're really in good oxide, we have to kind of, there's a patience that is required. But now we're finally getting numbers to come in and report from the labs, and we know where we're going. If we're drilling a hole that's, let's say, north-south, and it's a -45, and we're seeing oxide, the geologists want to be able to swivel that drill based on results, say 52 degrees to the east, and a -70 based on their interpretation of what's in that hole. We can't do that without assays. So right now, we drill a hole, 2 holes that look good from a site, or bad, neither here nor there, and then we move them off to a different drill site because we've got our prelims back from that hole, and we know how to orient it, because you don't want to waste the shareholder money. It just doesn't want to happen. Now it's finally flowing, but I will tell you, by the time we drill, now with 3 drills, and hopefully that gets upgraded again in short order, I don't think we're going to see nonstop assays well into February of next year. Okay, so you're going to see 2 metallurgical releases, anything else that's pertinent, and nonstop grades coming in hopefully every 2 weeks as news flow is going to keep going. And then we'll just see how the market goes. And of course, these stocks will all trade, all of us as a collective group will trade up and down with the gold price. And you don't know what that's going to do, right? So what the metallurgy is important to is the shareholders to know that the system, how it operates. It's important to any companies, the public company that's a producer that looks at Liberty, because it's a major de-risking point for the company. But the size of the system is also relevant, because is it a tier 1 asset or is it a tier 2 asset? And based on what we can see, we've only drilled just over 5% of the total target size. And okay, so that's really what you have to pay attention to here. So yeah, we're really stretching out this time. We drilled a hole, a 3.1 kilometer step out from last year's first square kilometer, and we hit 55 meters of 0.49 grams of oxide. That was 93% cyanide soluble, and that added $50 million to Liberty's market cap by confirming the district was there. And now those drills are going to float everywhere within an 11.8 square initial area, just to show you what kind of volume of rock we're dealing with, at the same time build ounces. But if we hit a new discovery, that drill stays there. It doesn't move. You double shift it and just pound holes into it.
Okay. I guess getting back to, this is a big project, lots of upside, location and jurisdiction. Like, we know it's in the States, and the States is a good jurisdiction. Geologically, it's the Great Basin, but we're not Nevada, we're Idaho. So how location-wise, how does that help you?
Well, it helps us because we're still in the Great Basin. It was our geological team when Long Canyon was discovered that said, why is everybody in the trough? They should be on the shelf at the same time. So they went up on the shelf and found Long Canyon, which is a tier 1 gold producer, right? It's producing at an 8.4 to 1 strip ratio at $5.71 an ounce. It's the most profitable mine under the Barrick JV. with that strip ratio, but it had 2 gram material, right? So
And run of mine.
and it was run of mine, and they decided not to even consider a milling situation there, and they went ahead with that without trying to maximize, or even not to my knowledge, they didn't do it, maximize their production.
From what I remember, when I went there and that, it didn't matter.
It didn't matter. It was just that high grade. And now we find
metallurgically the way it came out and everything like that, it didn't matter.
Yep. And so yeah, it didn't really matter. So everything else is just falling in line here with something that's really, really big.
You know, the other reason I really liked Liberty was not only because of Black Pine, which attracted my attention, the location, and having Moira on the ground doing the work, but also your addition, gets seems to me has injected the company with the opportunity to capitalize on assets that are within the portfolio that the market gives you no value for, but you've actually been able to monetize them. And so can you talk about like organic funding of this exploration program, and then, resorting what your priorities are to focus on, Black Pine?
Yeah, I'm not sure if people who are watching this are going to understand marking to market, but you and I most certainly do. If you get no value, it's a good asset, but the market's not giving any value for it, like our Halila copper gold porphyry in Turkey. We get 0 on it. If somebody's going to go look at the company, that's fine, but you're going to get 0 valuation for it. But if we went out and we signed an agreement to sell that asset over a 3-year period for 22 million US, now I can mark 22 million US to market in a market cap because it's a cash receivable. So in the last, I guess, 8 months or so, I've moved 4 of 6 assets out of the company that we're not being able to get any value for. And it comes in sequentially, and the total is around $40 million Canadian. And that's non-dilutionary to the shareholders, and no corporate finance fee is paid on that, because that's what I'm trained to do. And so you go out and do that, and you save $1 million or more in fees, and it all goes to the company treasury, but it builds the asset valuation, and it makes the focus of the company quite straightforward. It's 2 big oxide gold systems in the Great Basin. Everyone's looking for oxide. They're cheap to build, and cheap to produce gold, and cash and receivables. And it just simplifies a very historically jumbled up company with multiple assets in Eastern Europe and in the United States, and makes it quite simple for people to understand.
Right, and also simpler for potential M&A, because I remember Frontier had to basically clear out a lot of their portfolio before the Newmont deal.
Yeah, who's really good at that who's probably one of the best visionaries in the business has been Ross Beatty at de-risking assets before he sells them. Yeah, like he takes the dirty work off of something, and all of a sudden a company is acquired. He's brilliant at it.
Okay. Well, going forward, I guess, we're talking about an asset in the Southwest U.S., Carlin type, the deposit's known, pervasively oxidized, you're getting the grade, the metallurgy's coming up, and you're funded. So how far are you funded? Like, if you're going to double your drilling program, are you funded to like for the next 12 months or this next?
Oh yeah, easy. Yeah. Because of the fact that we sit on 14.5 million US in cash right now. The Black Pine extended drill program is for 10.6 million, give or take. I've got another 6 million US hopefully coming in on or before August the 15th from the Halila sale. I've got another 6 million US coming by January 20th from warrants that are in the money. And I have another 14 million US, no more than that, it's 18 million US in warrant exercises, and another payment from Turkey pending next year without diluting the shareholders. So wow. It's well structured.
That's not in your working capital right now, but that's stuff that's coming.
Yeah, and so as a check comes in, if it's relevant, like we own 2 million warrants in region, Ely Gold, Eric Sprott's royalty company, they're in the money by 2 million US. If we ever exercise them and sell them, and that's just more money in the treasury, but that's not a newsworthy item for me that we just put more money in the treasury. But if I get a big payment in that, that's more relevant to the shareholders, right? So it's easy to get money. And I've turned down financing offers because I just don't need it yet.
All right.
So it's not a bad position to be in.
Okay. Well, I mean, that's a good segue into the capital structure. So what is your ownership? Is it concentrated? Can you point to these people and they own 2/3? How is it, and how much retail do you have?
Well, I talked to 10 of our largest institutional shareholders out of London and the United States tomorrow for 1 hour each to give them an update. So it'll be a long day tomorrow. And but if you go into the United States, you can look it on Bloomberg. You can see that Van Eck and RCF and Merck and Franklin and the Oppenheimer Gold Fund, plus 4 or 5 other U.S. funds, are in that list. But they're publicly reporting issuers. They add up to about 36% of the company. Management owns 6.8, and I have about 10 million shares of exposure to the company. So, but if you take the non-published funds, which are maybe European funds and whatnot, it goes up probably to about 60%. And I can talk to maybe 30 institutions that own it, all because of the size of the system and its oxide in a good jurisdiction, right? That's where the momentum's going.
Okay. I mean, what we've seen as well is a lot of these people, companies doing strategic alliances or getting a major involved, with an equity placement. Because you're very well funded, you've got Moira doing all the technical work, on a level beyond probably what a lot of the majors can do right now in terms of exploration. Do you feel that you even need that with respect to, hey, this is something that majors want here, I got a footprint in me, or it's best to just hold off on that as long as you can?
I've said no to any producer that's brought that up in the discussion.
Okay.
So
That's
that pretty much answers your question.
Yeah, that's an advantage to some that you don't need, because you've got the jurisdiction, you've got the location, and you could prove up the deposit to the extent that you need to by yourself.
That's correct, yeah.
Yeah. And funding it yourself as well.
Yeah, we can do it ourselves, yeah. But there's 5 different analyst firms that cover with price targets on Liberty Gold. And I, after being on the sell side of the street, anybody, I think, if I am paying a fee, I try to compensate everybody on a fairly fair basis. And just because they are paying attention and they're all are passing the word on something that they like. If they didn't like it, I wouldn't do it. And so I think you have to pay the street. And people who don't, I think, are making a mistake.
Okay, so maybe if we wrap this up, like somebody who's looking at your company, location, upside potential, well funded, with a management team with previous success, what are they looking for in the next 6 to 12 months with respect to news flow then?
I think you're going to look at nonstop news flow starting momentarily, and it's going to come fast and furious.
So that'll be
and consistently.
Drilling results and metallurgy and
other things. Yep.
And other things. All right. Well, thanks for that, Cal. I appreciate that. And back to you, Georgia.
Thank you.
Thank you guys both so much. That was awesome to get a deep dive on Liberty Gold. Just to review those tickers, that is LGDTF on the OTC and LGD on the TSX. Joe, you're at explorationinsights.com. Is there anywhere else viewers can find out more from you?
Yeah, I mean, I tweet every now and then at Joe Mazumdar on that's my Twitter handle. Nothing cryptic. But yeah, we've got a lot of free stuff on the website as well that you can review, and obviously subscriptions. It's a subscription-based service, so all the details are in the weekly newsletter.
Excellent. Thank you guys both so much. Hi, thanks so much for watching. If you'd like to hear more from Cambridge House, please follow us at Cambridge on Twitter. And if you click the link in the pinned comment below, you can follow our weekly newsletter.